Hey, what's up, everyone? Evan Carthy from evancarthy.com. Today is Friday, August 18th. Doing it a little bit earlier today. There's been lots of movement. Want to go ahead and get this done before the market's over for today. You can see starting out on the SPY that I have been watching. This is why I don't trade off trend lines when just drawing them, because my prediction was completely wrong from the other day. Because I was seeing from this arrow, I said, oh, I'm thinking market's going to go up. It's about bottom of this potential trend line right here. And what just happened the past 1, 2, even 3 days down today, the market just opened up way lower and it just had a huge sell-off there. So that is the reason why I do not trade off of just subjective trend lines that I draw, even though it looked really nice all the way up through here and then bam, it just fell on out. That's why I don't use them, because they are not reliable for it. But got a lot to talk about today because I've adjusted some of the setups, just because I know I've mentioned this before, is what I do for these setups I trade. Yes, I do trade live just about every single day, and I show here on these videos good, bad, and the ugly, the trades I make. And one of the reasons why I do that is because it helps me keep me accountable for when a trade setup that I've been using does not work. And that tends to what happened most of the time is I'll do a trade setup, it works really good for a while, but then eventually I'll find some scenarios where it doesn't work and it's time to either scrap it or tweak it to where it fit in different trade scenarios. So earlier I was using the shift pitchfork and the inside pitchfork. So for shift pitchfork, I've scrapped that one for now. It was working pretty good, but I just found enough scenarios where it did not work well enough for what I was looking for. It worked pretty good for the most part, but there are just a couple where I found that it didn't work out too well, so got rid of that. So now the one I'm looking at is the inside pitchfork with a different number for it, and the number for it is, for the inside pitchfork, is 2.645. And how I came up with that is it is the, oh wait, hold on, that's not it. Chat one more time. That's not it. There you go. So it is the square root of 7. That's basically how it got there, because one thing I've noticed is these square root numbers for extensions, for whatever reason why, I don't know why, they seem to get a lot of movement off of them. And so I was originally using the square root of 3, 1.73, as you can see right here, but I did find enough of the time, some of the times where price would close either above or below the line, and that's what I'm looking to get in for it, but it didn't do what I needed to do for it. So the 2.645, which is the square root of 7, seems to do pretty well. So that's what I've been currently using here for that. And then what you see right here, these blue lines right here, I know I just went off on a tangent to start off with regarding I hate trend lines, yada, yada, yada. Well, how I use these are, I use the previous days, just like when I'm using the previous day's highs and lows for my extensions. You can see the purple lines right here. These are the extension lines, because most of the time when the day hits down into either the bottom extension level or the high extension level, that's where you see some form of support. As you can see from here today, we're looking at the 15-minute chart, the S&P 500. You can see today, it bounced off right in that support area, and that's where it currently has found support. Now, whether it will stay that way by the end of the trading day or not, who knows? I mean, there's some days where it just blows it out and there's nothing. Let's see, I was looking for a blowout day. I haven't really seen any. I think yesterday was a decent one. Yeah, yesterday was considered a blowout day. You can see price went down and did find support off the level, went up there, but then when it came back down to again, there's no support left, and it just blew right through it. So for the most part, you will see some type of reaction off of it, and for the most part, that is kind of either going to be the high or the lows for the day, either the bottom of the, somewhere in between there for the low, or someone up there for the high. But obviously, there are some days when it just blows through it, so I don't trade off of these strictly as, going long when it hits it or short when it hits the high point of it, but they're just good markers to see where the market is for that day. So what these blue lines are, one thing I noticed is I use the previous day, 2 previous days highs. See right there, there's high that day. You know what, let me put this on. There we go. There's the high from that day. There's the high from that day. And all I do is just simply, I'll just show you, it's just drawing a line right there to right there. So when the price, this is a trade that I have been looking at taking, so when price bounces off of it, it's just for a quick scalp. So if it goes up there and hit it, you scalp it for a quick couple points here. So there's the low from 2 days ago, right there, that's the low point, and then there's the low right all the way down right there for that one. Now, when the market opened, right, going the next day, because this blue line right here is that blue dotted line going vertical, is the daily separator for when that day closes, and this day opens for it. It closes at 4 p.m. Central Standard Time at my time, then opens up at 5 p.m. So that's what that is. So as you can see right there, it closed below it right there, hit it, and then bounced off of it. So that would have been the trade to take right there. You can see it also did today as well when the market, was fully in full swing right there. I don't take the second hit off of it. I just look for the first hit off of it, because I've seen it before where it hits the second time, it just blows through it. But the first hit seems to be pretty good where you make a good scalp off of it. So here on the S&P 500, there have been some really nice setups today, and I've even gone down to even like using the 1 minute chart. And so how this inside pitch forward works is it's pretty much the same as the other ones that I had been using before, where we just look for a close above it, and then we just draw the Fibonacci levels. Let me get the correct one on there, right there. And so you see it closed above the yellow line right there, so that signifies you can get in right there. Target is the 1.146 level, so got in at, what did I get in right here? 4374.75, and got out 4378.25. So I don't have my exit just right up there at the hard exit. I have it a little bit lower. So that was at, what's that? 78.25. So it's a point lower for this one, just to ensure you get out of it, because I have seen before sometimes where price will say you got in right there, it will go very close to, like, to say right there, but never quite hits it and then turns and reverses. So rather just get out, be safe with it, call it said and done. So that is how that one works. So good another little scalping setup. So that's the S&P 500. Going in to the Russell 2000 right here, you can see the price. Now I did miss this one because I was actually long from getting in right here and then getting out right there, because I figured that was going to sell off a little bit when it hit. But I wish I had reversed it and sold it right there, because as you can see, if you had gotten short right there, you're looking at about a good little 3 or 4 point scalp. Yeah, I guess it could go down to 4, but a good 3 point scalp there in the Russell 2000. And that's what this trade setup is. Trade on the blue lines, you're just looking for a quick scalp. You're not looking for, or I'm not looking for a big reversal for it, but just another trade setup to add to the arsenal. And it doesn't always hit, because you can see even down here, it came close, didn't hit, came close down here, didn't hit, but it does show, for the most part, decent kind of like trade channel for the day, what to look for when there's potential resistance. Now, it could hit off this, come down a little bit, which this does have plenty, say get a little retracement right there, but then the market is just strong and it powers right through it. So that's why we're looking just for a little scalp right there. And this other trade step I have, it goes all the way back to when I first started creating this trading, when I used to do Forex, just because the margins are a whole lot better in Forex, you can trade a whole lot more. And so what it is using, let me delete that. So all you do is you use a high to low semaphore, and when price comes up and hits at least the 50% mark, that means we do have a valid trade. And all we're looking for is price come back down, hitting the 1.146. That signifies you can start getting in there. Now, I don't get in at that level. The earliest I get in is all the way down here at the 2.618 Fibonacci extension level. I know it says negative 1.618, but when you go the opposite way, you have to take out 100 for it. So it's 2.618 and then 4.236. These are just Fibonacci extension levels, where if you divide the Fibonacci numbers against each other, you eventually hit those. And so the exit you're looking for from this is, what I do is I take wherever the previous high from the middle of the move is. See, there's the ultimate high, there's the low, high anchor, low anchor. As the high goes up before it goes down, and I just take that and let me put on the correct one, retracement. And the exit we're looking for is the 50% line after price hits the 1.146. So we can see, price hit the 1.146. So we just keep on dragging it down. You see, price never came and hit it, so we just keep dragging it down, 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 down. And the ultimate exit for it would be right here, right there. I'll draw a little box to make it a little bit clearer here. That's the exit right there you're looking for this trade right here. So what I'm hoping for is, because this is where I got in it right there and then ended up getting out right there, just I was hoping there's more of a sell-off back down to the 2.618 line. Then I'd look to get in right there and take the exit right there. Now the safest way to take this trade is all getting all the way back here to the 4.236 level, because from what I've seen, for the most part, that seems to be a really good turning point, especially on these futures contracts. Now in stocks, it's a little bit different. It can go higher, like Bitcoin. I saw on 1 to 7 when I was looking at it. I mean, it was actually a short position, but it went way away from it. Eventually it came back and hit the 50% line. But for the futures contracts for all these markets over here, seems to work pretty well. It's just that you have to be wary that there will be some drawdown to it depending on where you get. So even if you get at the 2.618, you can see right here there still was some drawdown right there, 17 points. And then if you get right there, and you're looking to get in, I'd be looking to get in down here as well. There's definitely be a whole lot more drawdown, but so the safest one's down here for the least amount of drawdown. But the thing about it is you obviously will miss out on some trade setups. So in a perfect world, what I'd be looking for is price to hit that, sells off at least at 2.618, maybe even lower. Maybe I miss getting in right here, and I just take it all the way down at the extension low of the day, and then price gets back up. You just take it in the exit, you just take it as far as low is, and you're looking for it to hit the 50% level. So that's how that one works. Are currently in a trade right here. Yeah, here we go for the Dow Jones. Let's see what time frames. I think it's on the minute time chart right here. Yeah, the minute time chart. So you see here we have the 3 semaphores right there, and right there. Price closed above it. That gets in. I got in at 34,563, and then the exit is just below the 1.146. So you see price is selling off. So for this one, what I noticed, if you do get just a huge sell-off, which doesn't really happen that much, but if you do get a huge sell-off all the way down here at the other side, I'd be looking at getting in down here. I'll go ahead and put that on. And you take the exit all the way back up to about where the original entry point is, right there, to get out of that one. So that's how that one works. But I've rarely seen that happen where price breaks out of this, doesn't hit the target or even come close enough to the 1.146, goes down and hit the 1.146 the other way, or even goes down lower, sometimes at 1.44. Just want to show you get in right there. And then eventually comes back up and gets about to the previous entry level right there. So that's how that works. And again, this is just on the 1 minute chart, so it's not like the 15-minute chart where these moves are a whole lot huger than the 1 minute chart right there. But it looks like right now in the market, as it's lunchtime over on the East Coast, and everyone's probably, a lot of people, big traders heading home for the day, that market's going to start slowing down, probably either selling off for the gains they made today, or just waffling around here a little bit until the weekend. But that is the setup we're looking for right here. Going over to crude oil, I was looking at it. Let's see, did it want to close above it here? Well, it wouldn't be the 1 minute chart anyway, would it? I think it's on the 5 minute chart. Let's see, yeah, red. Nope, so it still didn't close above it right there. We can see right here we did get two. So when it eventually closes, or if it does, if we don't get a new low down here, but if it closes above, or a new semaphore forms right up here, but it finally closes above the red line, I'll be looking to get in and taking it up to the 1.146 level right there for about hopefully I can get in right there, about a 40 tick gain there in oil. And as you can see, this was, I'll take a 15-minute chart so it's a little bit easier to see. So you can see from the previous 2 days, there's that resistance trend line. Here's the support line, which obviously is not going to go down there and hit today. But from earlier, it barely missed it. From it, you can see it missed it just enough to not consider it being hit. But then when it came up there and hit that, I shorted it right here. What did I get in at? 80.28 and got out at 80.15. It's a little 13 tick gain. Like I said, it's just a scalping trade. I haven't figured out exactly if there's like a Fibonacci level you can get out for it or what, but I just take it as a scalping trade for anywhere from like 10 to 20 ticks, depending on what market it is in. Let's see, there is room for it to run up for the extension level. That's another reason why I want to get in this trade right here, because there is plenty of room to hit it right there before it hits the extension level where potential resistance could happen for it. I'm sorry, this oil. Yeah, so that's another reason why I'm looking to get in that one. Nasdaq over here, you can see I wanted to get it down here where price hit the bottom, missed that one because you can see there's a line. It obviously hit off that right when the market opened earlier, well, I guess last night, but today. And let me get this out of the way here. And there was a trade earlier I took in it. Yeah, right here. I think it was using these 3 semaphores. Yeah. So the price closed right there to get us in. I ended up getting in at 1486.75. Let me show you what that looks like from here. Let's see there. There's that high. Inside pitchfork. There's the exit. So got in right there. So 14,686 to 14,699. Nice little win up there in the Nasdaq. Went down a little bit before it came up, hit that, but anyways, just wanted to show that one here real quick. And it looks like, yep, we do have 3 now here in the minute chart in the Nasdaq. 1, 2, 3 semaphores. So if price closes below this yellow line right here, we just draw the Fibonacci down to wherever the low is it closes, and the target's going to be the 1.146. But as you can see from today, the extension level for the day down here, you see that's definitely has been the low for it as well, and it's going off the previous 2 days lows trend line right here for that. So those are the markets for today. Bitcoin sold off a lot. That's another reason why I got rid of the was it shift pitchfork. It just wasn't correct. It kept on selling off, and so it's time to quit saying that trade setup works 100% of the time, because it doesn't. And so it's just wrong on that, because I was looking at this being the it was a big support area, but then I thought it was going to break up. But once it broke down, this is like that shift pitchfork trade doesn't work. But for the inside pitchfork trade right here, in fact, let me change this to the inside pitchfork trade. What we're looking at right here is we still need price here to use in daily chart. So we have the 3 semaphores. Even though we sold off, we have the gap today. It still has more. If it is going to be a short trade, it needs to close below the L line, so it still has some work to go for that right there. Let's see here. Yeah, that one's sent in. So anyways, those are the markets those are the current trade setups that I am using right now. We have the see, there it is right there. We have the inside pitchfork trade setup using with that target. We have the previous day's highs and lows trend lines, the scalping trade we're using, and then last but not least, we have the bread and butter trade, as I call it. That was the initial one that I had come up with, that I am using is there, but this one doesn't happen as often, and the earliest I look to get in is the 2.618 level, but would preferably get in at the 4.236. So when that happens, I'm going to load up on it, but until then, just have to sit and wait. So they're the ones, especially the inside pitchfork trade, get a lot more action. So anyways, take care. Talk to you later. Bye.